In this video, we'll look at the best crypto trading bots. I'm going to go through each of the individual bots, how they actually work, and then how they can help us adopt certain strategies that we want to implement. I've also got data here from over a year's worth of running some of these bots, and we can see exactly how they've performed and how they've helped us try and outperform just a buy and hold strategy. Timestamps for all of that down in the description. Many different trading platforms now offer trading bots. Once we know what the bots actually do, we can use them across different platforms and we can use the platform that we want to use. Binance has a lot of trading bots, and so I'll look at their bots in this video. Pinex is a specific trading bot platform that has the biggest, broadest selection of trading bots, and I've used these personally a lot. And then KuCoin as well is very popular for trading bots. It has a good selection and a lot of people use this, and so I'll look at these three platforms in this video. I'll leave links to them below if you do want to sign up to them. They often give deposit and trading bonuses. You can check the details via the links down below. The first type of trading bot we'll look at is a dollar cost averaging bot. Dollar cost averaging is when you just choose an amount of money that you want to invest at regular intervals, and it doesn't really matter what the price is. You just want to be investing over that time period. So you can set this up and do it manually, or you can do it automatically, which is going to be great for a lot of people. So let's have a look at KuCoin and how to do this. We'll go to the trading bot feature in the top center. Now Binance also have this. It's just called auto invest, and you can just set it up at regular intervals. But come down to press DCA, and we'll choose next, and then up in the top right you can see BTC USDT. So you need a dollar stable coin to do this. Most of the time US dollar tether is the stable coin that most exchanges use, and so that is what you are selling in order to buy the crypto that you're investing in. So in this case, Bitcoin. We're going to invest every 1 week and press confirm. And then the amount per investment, choose an amount, $100 a week or whatever you want. And it's literally that simple. Now you can go to advanced settings and you can see the max investment. So this is going to run until you don't have any funds left in your account to obviously keep buying, or you can have a max investment or a date of first investment if you don't want it to start immediately. So there's different settings that you can choose. It's all fairly self-explanatory though. You just choose an amount to invest and a time frame each investment when it comes. So the auto invest feature on Binance is the same. So correct auto invest. Again, very simple. Choose the asset that you want to buy into and just press create a plan, and it's going to give you the options here. How much do you want to buy at what interval? And again, they use either US dollar tether, or on Binance they actually give you some other options right here, and you can choose the time frame that you invest in. And as you can see, the historical ROI right here, pretty decent over a 5-year time frame. But if you choose different time frames, for example over the last 6 months, 1 year, you may see obviously the percentage increase going down. You can't obviously make as much money over a shorter time frame. So you can look at 7 days, 3 months and see what you would have got over that time frame. But as you can see, on a 5-year time horizon, all of the top cryptocurrencies have obviously produced very good gains, especially the top performing cryptocurrencies. So if you want to invest in something over the long term, dollar cost average is great. You just invest a certain amount, but you have to make sure that you keep topping up the account with either dollars or US dollar tether or another stablecoin. Another popular bot is called the Rebalancing bot. This is where you can set up a portfolio of a few different coins, and then the platform automatically rebalances those coins for you. So we'll go through this. It is one of the most popular bots on Pinex. So if we press create right here, you can see there's a dual coin mode or multi-coins mode. So essentially what happens here is you set up the bot and you set it up with percentages of the coins that you want to invest in. And then when the prices move, you either buy or sell those coins to keep them within the percentage that you want them. Now, there are some pros and cons to this, so we'll go through this. We'll actually look at the multi-coins mode, and as you can see, you can essentially set up your own index. So if you want to get some exposure to maybe, DeFi or smart contract chains or kind of just top 10 coins, you can do that. So choose an index, and we'll go see some of these. So we can see multi-coin here, Benson's Choice, top 10 coins. Top 10 coins is probably something we can have a look at. Press choose, and then you see you can just invest in the top 10 coins, X stable coins, with a certain amount. So what it's going to do is buy a certain amount of each. Doesn't matter what you invest, you can invest a certain amount, and it's going to take a percentage of that and put them in each coin. Now, what I would say the downside of this is that what this will do is essentially sell coins that are performing well and becoming a larger part as a percentage of the portfolio, and kind of reinvest it in coins that are underperforming. Now, that can be good if you actually think that the underperforming coins are going to do well again and actually catch up to the outperforming coins. But what I would suggest is you want to actually just keep holding the coins that are outperforming, because outperforming assets tend to outperform over the long term for a reason, because they're better than the others, or they just have a bigger market. And so something with the rebalancing bot, I think it's okay to get into, but the rebalancing portion is not something that I would personally get into. It is a popular bot, but I would not want to rebalance coins that are doing well to buy coins that aren't doing well. Also with the customization right here, you can go to advanced settings and you want to make sure that you're not rebalancing too often. If we actually go over to KuCoin, you can see their smart rebalance bot. It rebalances very often. So if we go to, some index right here, so we'll go to the large cap beast and we look at the top coins essentially. If you go down to the settings right here, the auto rebalance, it says, do you want to rebalance every hour? For me, if you're going into a portfolio like this is a long-term investment for multiple years. You definitely don't want to be over trading and paying trading fees in and out all of the time to rebalance every hour. It's going to eat away at any potential profits that you have. You can switch this to 28 days so that you can rebalance every 28 days, which is great. But like I said, with rebalancing, I would just want to invest a certain amount in those coins, and if the coins outperform, I kind of would want them to keep doing that and not to sell them to invest in coins that are underperforming. So let's come to the most popular type of trading bot, known as the grid trading bot. I've actually had 2 grid bots running for well over a year now, and we can see the data from these. I set them up in a previous video as an experiment and as an example, just to see how these things would actually perform in the real world with some data. We've had over a year of that now, and we can see how they've performed versus the underlying assets. How do grid bots actually work? Well, essentially what they do is try and take advantage of volatility within a set price range. And so they just buy and sell at, let's say, 2% intervals all of the time, and try and eke out some price movements and profits from volatility. So what they're trying to do essentially is take a long position in a crypto, but then take advantage of the small ups and downs as well. Sounds really good, but we can see how they've actually performed in the real world. So how a grid bot works is that you do take a long position. So there are reverse grid bots as well, which actually take short positions and you kind of bet on the price going down. But normal grid bots are long, and so you actually have a long position mostly, and so you are going to benefit more when the price rises. But what they do is, they buy a certain amount at a certain price. And then when the price moves down, they buy some more. And if the price moves down, they buy some more. Now, when the price moves back up, what they can do is sell the one they just bought for a profit. If the price moves back down again, they will actually buy another small chunk here. And if the price moves up again, they'll sell. If the price moves up, they'll sell that one that they bought. And if the price moves up, they'll sell that one that they bought. So they do this with a certain amount of capital over and over and over again. And the bids and the offers, or the buys and the sales, just get refreshed and refreshed over and over again. And they essentially try to print what they call a yield out of the market, where they're taking advantage of that volatility. However, for the most part, you are going to buy a decent chunk when you open the bot. And so you do benefit more when the price goes up. That's what these long bots are trying to do. You can see exactly how this strategy works on Pionex. They give you all of the buy and sell orders. So this is for Bitcoin here. I started this bot around 41,000 for the price of Bitcoin. And I set the parameters here down to around 14 or 15,000 to the downside, and then 40 odd thousand, 43,000 to the upside. So when the price is in between those ranges, the bot is going to be working for me, trading those small amounts in and out. For Ethereum as well, I started this bot at a lot higher price for Ethereum, and I set the bot parameters around 900 to the downside, something like that. For Ethereum, the bottom price is around 975, and then the top price right here is around 3,000. So these bots have a very wide range. Now, if you want to trade shorter term, you would have the top and bottom ranges much closer to the current price so that you can put more capital to work, because the bot does have some capital back in order to buy some of these lower prices. That can work for you if you're trading over a longer time period. If you're trading over a shorter time period, you want the bot parameters much closer to the current price, so you have more of the dollars to spend and trade closer to the current price. But how have these bots performed exactly? You can see down here both are in a loss. MBTC is down 22% and the ETH bot is down 30%. But how has that performed in comparison to just buying the same amount of those assets when I started the bots. So you can see here for Bitcoin, the grid bot is down 22%. If I'd have just bought the same amount of Bitcoin at that price, I'd be 31% down now. So the bot is outperformed by 9%. You can't really ask for more than that, but as you can see in the real world, these bots are not going to perform miracles and make you profits in a down market because they're long bots. However, what we can see is the bots have outperformed buying and holding that chunk at that price. Why? Because the grid profits, as you can see, are about 3%, and it's bought some lower for me. So it's actually got a better average price than buying and holding at a chunk at 41,000, which is where I entered this bot. So that worked for me on the downside. If you're in a bull market, then you may actually get a slightly worse price for your entry, but that kind of doesn't matter because the price will be going up anyway. But as you can see to the downside, they've really worked to actually get a lower entry price for me. And for me, I think if we're going into a new bull market, which it looks like we are, certainly there's an uptrend here. This could actually work out really well, but you've of course had to hold the bots for at least a year. I'll hold these bots for a lot longer. If you want to know how these bots are doing, you can come into the private Discord groups, link below. You'll see the crypto investor course link below. You can ask me exactly how these bots are doing. I'll show you exactly how they're doing over time and how they're performing in comparison to a buy and hold strategy. There are some things to consider with grid bots because they are just a tool and they can't make a bad trade good. The first one is grid parameters do matter. So if you have a very wide grid from top to bottom, you are spreading your capital out very thin. That may not be good for a shorter term trade. You may want to concentrate it and you may want the grids to be a certain distance. In fact, if you go onto many of these platforms, KuCoin, Pionex, and you go onto grid bots, they have AI grid bots where you can actually just let the grid bot do it for you. So if you press create, you can see there is a strategy here. You can customize it with your own parameters, or you can just let the AI bot do it for you. And it's going to tell you the top and bottom price and the difference between each grid. So you can have a look at that and play with it over time. Also, what we can see is that the crypto choice matters. So again, if you're playing a shorter term trade and you think it's going to be volatile, that may be very good. However, if we can look at some of the top performing grid bots, you'll see that these are just random coins that have become very volatile, very short term, and may not be good to get into for the future. So you have to really think about what you're doing and what you think is going to happen in the future, and then use the grid bot as a tool rather than just something that you hope will make money over time, because it really won't if you've set the grid up wrong or if you're just in the wrong asset. There are many variations on the grid bot as well that give us different options depending on how we want to trade. The first one is a leveraged grid bot, and a margin grid bot is pretty much the same thing. This is actually where you use leverage and margin to increase your capital. So you're essentially borrowing money from the exchange here and using your assets to fund any losses. So with leverage, they use the crypto futures market. You can leverage up, let's say 5 times. So if you have $1,000, you can leverage up 5x, meaning you'll have a $5,000 position. But obviously that $1,000 is there to pay for losses. A 20% move on 5x leverage wipes out your capital. So this is only really for short-term speculation, to be honest. Margin grid bot is a similar thing. You can use margin to increase your position size. We also have reverse grid bots. These are the exact reverse of a grid bot. So whereas I've gone for a normal long grid bot, so that means that we have a bias to the upside, have a bias for buying, hoping the price goes up. A reverse grid bot uses crypto futures again to actually have a bearish bias. So you start selling first, and the bot is biased towards essentially selling, trying to make money as the price falls. So again, if you're looking to trade shorter term and you want to take short positions on something, that might be something that you can do. Infinity grid bot just means this is a very long-term buy and hold thing where it's just going to basically trade the price to infinity. This may work, but you spread the capital out very thin. So like I said, with grid bots, it's always really trying to get the best amount of, trying to use the most capital in the shortest period of time. On Pionex anyway, what you can actually do is change the grid bots anyway. So if you come down to more, I think it is, you can change all of the parameters. You can actually release profits that have made from the grids. You can add more, you can pause it, and you can obviously start a new bot there if you want to start again with different grids. So Pionex does that. Not every platform lets you release profits though, so check with the platform that you're using. The next bot we'll look at is the spot futures arbitrage bot. This takes advantage of the difference between the spot market, which is the cash market with crypto, and then the futures market. Now, the futures market has something called a funding rate, and that funding rate is there to try and keep the futures price in line with the underlying spot price. Well, you can have an arbitrage between these two markets where you essentially create a neutral market position, or you attempt to anyway. And so you go long in the spot market and short in the futures market, the exact same amount. So technically, you should have what's known as a delta neutral position or a market neutral position. So you're not attempting to take any directional risk in the price of the asset. You're just trying to take the arbitrage out of the funding rate in the futures. Now, the funding rate in futures is positive most of the time. Definitely in bull markets, you'll see that the funding rate is positive, meaning that you can take that funding rate. However, the funding rate sometimes is also negative, and so we have to balance that. What you can do here is look at the asset. So we'll choose ETH, and you can see over the last 70, 30, or 7 days, 30 days, 180 days, the APR is around 3 or 4%. So what the bot tries to do is buy a certain amount in the spot market and then sell a certain amount in the futures market. So you have a delta neutral position, and then you just take the funding rate, which over the last 180 days has been around 4%. You don't make or lose any money from price fluctuations in ETH because you have a long position, let's say of 500, and a short position of 500. So when this goes up 10%, that goes down 10%. So you're market neutral there. At least you should be to a few percent or so, and you just make that yield, which for ETH is 4%. So during a bull market, you're essentially just earning yield on dollars here. So during a bull market, you're going to underperform massively because that's when you want to be taking that directional risk. During a bear market, you have more negative funding days, so the yield might come down as well. So it's kind of something that you might get into if you just want to take less risk and maybe earn a little bit of yield. You can see for Bitcoin here that the yield has been around 3.5% or so, which is obviously 3.5% more than Bitcoin pays, because Bitcoin pays nothing. But you don't get that price exposure as well. So for me, you'd rather be just long the assets, but it is something that people can use to actually earn a little bit of extra yield if they don't really want to take too much risk, or they don't really know where the market's going. But there are some risks here as well. That negative funding can come in. So it isn't like, just putting money in a bank or in a money market fund for that yield as well. You also have platform risk here as well. I've been using Pinex a while, Binance, but obviously not your keys, not your crypto. And so you do have platform risk that you have to factor into all of these equations in terms of how much yield you think you're going to make. I'll leave some specific video guides and tutorials in the description that go through step by step all of these bots and how to implement them much more in depth. The links to these platforms are down there as well if you want to check them out. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.